Welcome to ForexTV.com. Today's Wednesday, July 16th. I'm Remy Hookey for your New York Forex Market Buzz. The US dollar is trading at the upper range of session highs against the euro, yen, and pound. Now taking a look at the latest headlines from the CP News Desk, US CPI inflation data surprised to the upside this morning. Meanwhile, Fed Reserve Chairman Ben Bernanke began the second day of his testimony, this time before the House Committee on Financial Services. The seasonally adjusted US Consumer Price Index rose more than expected on both fronts as the core rate ticked up 0.3% in June and contributed to a 2.4% year-over-year change. Now, total inflation rose 1.1% in the month and 5% on the year. The 5% headline gain, the highest annual figure since 1991, was due primarily to substantial increases in non-gasoline energy. And keeping the focus on downside risks to economic growth, Fed Reserve Chairman Ben Bernanke did not deviate from his remarks delivered yesterday to the Senate Banking Committee in his second day of testimony. In response to questions from members of Congress, Bernanke said inflation is currently too high and that it remains a top priority for the Fed. Bernanke added that the Fed was balancing the risks to the economy and promised to be responsive as the situation evolves. And in other U.S. releases, industrial production rose more than expected, up 0.5% in June. However, since economists called the figure misleading, saying the real focus should be on the core rate, which declined in the month. Over the past 12 months, industrial production has increased by 0.3%, and overall capacity utilization in June rose to 79.9% from 79.6% in May. And earlier this morning, the EIA reported that stocks of crude oil rose by 3 million barrels in the week ended July 11th. Stocks of gasoline were up by 2.4 million, while distillate stocks jumped 3.2 million. And net long-term tick flows came in below the consensus forecast, totaling $67 billion in May, and total tick flows for the month fell to minus $2.5 billion. This afternoon, I'm joined by Stephen Leahy, president of Back Bay FX. Good afternoon, Stephen.
Hi, Remy. Thanks for having me on this beautiful sunny day up here.
Well, thank you very much for joining me today. After a wild session yesterday in FX, we're seeing the dollar regain some strength after selling off on Tuesday. So let's start out with a look at euro dollar. After exceeding the all-time high and hitting 1.6038 yesterday, price action on the euro dollar daily chart is seeing a downward correction. Now, earlier, the Eurozone CPI data came out, which reached a record annualized rate of 4% in June. Now, while dollar negative sentiment has not disappeared overnight, from a technical perspective, there may be more room for the pair to retrace. So, Stephen, for the upcoming session, what are you paying attention to, and what's your euro-dollar forecast?
Hi, Remy. So I would agree with most all your statements there in terms of fundamentals versus technicals. Euro-dollar, we thought that spiking up and going over, breaking a new high just yesterday at the 160.38 level or so. We think that we'll be back in that zone at some point in time. I don't think we've found a true formal intraday bottom on U.S. dollar yet or a high on the euro dollar yet. But you are correct in that there seems to be some positioning with some dollar strength here, specifically after Bernanke's comments about the inflation. That being said, we are all anxiously awaiting the minutes that will be released at minutes to be released at 2 o'clock today. And we do think that, I should say, we continue to think that the Fed has painted themselves into a fairly tough position. They do a lot of talking about fighting inflation, but we don't think that they have the room to raise interest rates at this point in time. And so from a kind of both fundamental and technical basis here, we do think that Eurodollar is going to be pushing higher come the next few sessions by the end of the week. We think we'll certainly revisit those highs once again.
Okay, Stephen, before we move away from the euro, let's take a look at the euro currency against the low yielders of the yen as well as the Swiss franc. If we look at the daily charts, we see that euro yen fell to session lows not seen since the beginning of June at 165.30. But price action has been at the middle of today's range, while euro Swiss has also pulled back today and yesterday, although the 60-minute chart shows the pair edging back up. So, Stephen, for these euro crosses, what's your strategy?
Well, first, we actually have a slightly different take on both euro yen and on euro Swiss from me, actually. For euro Swiss, we've actually noted on our blog at backbayfx.com, we actually took a position going long euro Swiss about the 160.50 level. We've seen some support here multiple times in the last few days of trading. a fairly short-term basis, this trade for us. And in truth, we almost got stopped out at our stop level last night, but we've been held in the trade. Currently, we're in the money, 40 or 50 ticks. We think Euro Swiss is going to break higher still at this point in time. And so we think that we have a chance to get up to about the, I'm going to say the 160, 160 level before we even consider taking any profit. We get to the 160, 160 level on Euro Swiss, which is higher from where we are presently. We'll probably move a trailing stop on with us. And we are looking to check out some recent highs on that pair at about 160.240. On Euro Yen, we actually have the opposite feel. Once again, we had a couple good trades we posted on our website. We caught this move lower in Euro Yen, really to us based on fundamental fears and really risk aversion. We've seen the carry trades, both sterling yen and particularly Euro Yen, come off due to this risk aversion. And we think that there might be more of it still to come. We think we're kind of at a pause level here, trading between the 165.50 and 166 level. And we are looking to see Euro Yen break down even lower, kind of on more risk aversion in the coming days and weeks. We don't think the fears in the U.S. equity markets or global equity markets are done yet. And as always, whenever we see increasing volatility in global equities, we tend to see the carry trade sell off as well. Be that, which one comes first, the sell off in the carry or in equities, I don't know, but we do tend to see them as correlated.
Well, Stephen, while we're still on the yen, if we could also take a quick look at dollar yen. The pair is at the higher end of today's range after falling below 104 in the London session. And you mentioned equities, and in the U.S. Stocks are holding on to today's gains. But looking ahead at tomorrow's session, ahead of more U.S. data as well as earnings reports, what's your dollar yen forecast?
Dollar yen to us, really on a technical basis here. You and I had spoken maybe a month and a half ago. We had thought we had found a top in dollar yen at about the 106 level or so. Put a short on, and it cost us. We lost on that trade in particular. But we have now gotten back below that 106 to 106.50 level. And really, to us, that triggers more selling coming ahead. And so that's really kind of our basis is more of a long-term technical analysis of dollar yen. We do think dollar yen was traded down towards the 104 mark earlier today. We'll think we will be back down there and possibly even onto the 103 handle sometime in the next day or two. Again, on the back of, if I could, on a fundamental basis, it has to do with risk aversion and the cross pairs coming off. And in terms of actual dollar yen, we think there's further impetus for lower dollar yen, pure technical.
Okay, Stephen, while we're also paying attention to developments in the broader market and also the decline in crude oil prices today, let's take a look at the Aussie dollar. Now, the Aussie is off about a figure from yesterday's multi-decade high of 98.49 against the U.S. currency. But looking at the hourly chart, the pair has been pulling back since the overnight session and also on the heels of more comments from the RBA. But are you looking for a correction lower in Aussie against the U.S. dollar?
I'll tell you, Remy, once again, mea culpa here. We had played Aussie dollar short for a while on the 96.50 level, made a couple of short-term trades, and a couple of trades that cost us. Clearly, the move in Australian dollar for the last week or so to these multiple decade highs has been a pretty spectacular move, even more exaggerated than many of the other currency pairs. And as you note, it is very much tied into oil and commodities in general. To us, we don't see that this is over yet. And as much as the idea of parity or 1.00 on the Australian dollar versus U.S. dollar seems far-flung and perplexing, we think that is certainly within range here, again, based on as much Australian dollar strength as U.S. dollar weakness. The combination of the two and the commodities that we still think have not found a top yet, we're not ruling out Aussie dollar at 1.00 or parity, which would be a strange sight to see on the trading screen.
Okay, Stephen. Well, last but not least, before we wrap it up for today's interview, if we could take a look at cable. In overnight news, the ONS reported that the number of individuals in the UK claiming unemployment benefits rose 2.6% in June. Now, in terms of technicals, yesterday the UK currency soared above the $2 level, advancing to 2.0156. Well, the pair is hovering right below the 2 handle in afternoon trade, and after 6 sessions of higher lows and 3 straight sessions of gains. What is your near-term outlook for cable against the U.S. currency?
Near-term outlook for us, we do think we're going to revisit higher one more time here, maybe test that 2.01 level. Hovering here at the 2.00 level, I don't know that sterling dollar fundamentally in the long term is going to go much higher. And again, similar to euro versus dollar, we are looking for some sort of top, kind of gradual topping to sterling dollar. What I'm really hoping to see is at some point, 3 or 4 days of real bloodletting, cable moving 4 or 5 big figures higher and coming back off. Haven't found it yet. It's what we've been waiting for in both euro dollar and sterling dollar. At this point, though, in terms of short term, looks like we've tested below the 2.00 level a couple of times here in the last day and a half. In the last half a day. Got as low as about 199.50 or so. I think it's a decent risk-reward scenario to buy this, looking to gain about 100 points, and would stop ourselves out about 50 points lower from here.
Okay, Stephen, that wraps it up for today's interview. Thank you very much for joining me.
Thanks for having me on, Remy.
This has been your Forex Market Buzz with Stephen Leahy, president of Back Bay FX. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.